Well, hi folks, it's Stratman from Pitware.com. I'm just carrying on from my previous video on introducing support and resistance to the strategy. Now, when I call this the strategy, what I'm trying to do here is I do have a strategy I use, but it's made of a whole lot of different bits and pieces. And so I'm taking you guys on a journey of understanding the basics of the strategy and adding in each of the different components as we move along. So we've talked about the moving average component, and now I'm adding in the price action component. And for me, part of price action is talking about support and resistance lines and so on. So this video is about the price action component. I did an introduction. Going forward, we will probably look at the oscillator component, so that's whether we use stochastics or THV tricks. But for now, let's just have a look at some of the trading opportunities that are there, just using moving averages and support and resistance, because I'd really like you to get a handle on that before I start introducing oscillators, because once we start talking about tricks and things, you could get a little bit overloaded with just too much information, and that could be detrimental to getting this trading strategy down. So we left the last video with the euro yen, and I'd drawn this trend line here, and I said in that last video what I'm waiting for is I can see a pullback, and if we go back to the M15, what I was looking for was we're only interested in trading short. The reason for only trading short is because the faster moving average, which is the current time frame, in this case an EMA 25, is below the slower moving average, and so that says to me we're only looking at shorts. And then once we break through that, I'm looking for a pullback into it and then to trade away from it. Now, one of the things that I do to try and help is I'll have my H1 support and resistance operational. So if we just go and have a look at that, so we've got the euro yen on H1, and here's my support and resistance marked up. Now I've got a line here, and we can see that on this time frame the faster moving average is above the slower moving average. So one could get very confused, because in one sense I'm saying trade away from your moving averages, but then we've got a situation here where we're in between our two moving averages. Well, some of you will immediately realize that we've got to consider what time frame are we trading. If we're a daily trader, we're way out here. If we're on H1, we're here. If we're on M15, we're here. If we're on M5, we're here. So I mean, it really depends on what kind of trader you are, whether you're a scalper where you like M1 and M5, or whether you're kind of more a medium intraday and you're looking at M15. That's probably where I sit and doing a little bit of scalping, or whether you're a kind of longer term trader looking at setups like this. So your moving averages will give you contradictory kind of information depending on what time frame you're on. So that's the first step. So looking at this on the H1, which I do, just to get an overall picture, I can see that we've broken one of my trend lines. And also, if I zoom in a little, what we can see here is that we've actually had a candle close below that support and resistance. And then the next candle has continued on past that. So to me, this is considered a valid break of that support and resistance. Also note that we've got a support line here, and also the moving average out on the H1 is kind of centered around that. So to me, this here would be a very strong support line. So if I was in this trade short and it got close to this point here, I would be getting ready to pull the trigger to end the trade. I would be expecting a high probability that there would be a reaction at this point that would be probably a bounce. And if it continued on past that, I'm not really too worried, because I've done the trading the best I can think of, which is to get the most out of this trade to the next support and resistance line. Okay, let's go back to our indicator chart. So if we look at our indicator chart, what I would normally be doing to trade this kind of setup is I'm looking for shorts. We'll zoom in on this. I'm looking for shorts, and I would be establishing this trend line at this point here and noting that price is continually coming down to this, coming up, and I would be placing an order, a pending sell order, on my way up this line. And at some point that sell order is going to be triggered. So I probably would have been placing it about here. I may even, aggressively sometimes, I may even place a pending sell order way up here, close to the moving average. And sometimes, even though I say don't trade in no man's land, which is this kind of area here, I might even have a pending sell order close to this point. So potentially for me, and for people that are getting more experienced at this, you would possibly have a sell order at this point here. Now, just because prices kind of edge through this moving average, you don't need to worry about that. The whole point is that the moving averages here are telling you that short trades are the only trades to be interested in. So even if price kind of protruded through here, we're still only interested in short trades as far as I'm concerned. So a sell order here would have been okay. But if we're thinking conservatively and just sticking straight to mechanical rules, what we're looking for is that we're looking for a short, price is going to break through this trend line and move downward short. We want to be in that trade when it actually happens. So we'd be moving now a pending order up this line just as each candle forms. This one here might have got us into the trade, and we probably would have got stopped out. So I would have had a very short stop, a very small stop on that. So if I go down to the M5 now and have a look at what would have happened at that point, if I had been moving my pending order up this line and it was sitting at this point here, and it caused me to get into the trade, and then it retraced a few pips, I would be out. And particularly, I'd probably have my stop sitting somewhere just on here, and if it went past there, I'm out. And in fact, once it's gone into positive territory, I'm probably out straight away. My typical plan is to put my stop on the most recent closed M5 candle. So my stop would have been probably sitting about the top of this candle here. And so if price retraced back to that point, I would be out. So if we have a look, might have got an entry there. This would be a 7 pip stop. So this is a good way to get a nice small stop. And you know, I would have myself seen that I've got a big green candle next to this, and let's just put those on the top just so we can see that a little bit better. So I would be seeing that this is a big green candle, we've got this, and then price is starting to climb up higher. So I probably would have pulled this trade about here before it even got to the stop. So I might have lost about 5 pips. Then the next thing is that I'm still looking for shorts, and I might even be quite aggressive and say, well, I've got my longer trend line there, and I've got a smaller one kind of sitting here. And so what I might be trying to do is look at this and again have a pending order coming up here ready to go short. So I could have sold at this point, or I could have sold at this point here. So if you want to be conservative, you'd probably have a pending order just sitting here and you'd capture most of that trade. If you're a little bit more aggressive, you might go here. The whole key to this though is to be considering what you're thinking. You've got to think, am I thinking longs or shorts? That is the most important thing to do whenever you're thinking about pulling the trigger. Don't just look at price action willy-nilly. Take the whole picture in. Look at your support and resistance lines on your H1 time frame. Look at where your moving averages are on your M15. Go down to your M5 and you might be able to get a more refined entry. And pull the trigger at the right place. It might be by pending order, might be by market order. Okay, so there's a nice little trade there. If you had gone here, you would have got nearly 40 pips, 30 pips at least. If you had have been right up here, you would have could have got almost 50 pips out of that move. So that's how I do it. I trade pretty much like that. I'm interested in getting in on the pullback. I want the pullback. I don't want to get in down here. I want to get in when that pulls back. Okay, I hope that was helpful. We'll catch you later.